Yeah, it could be a potential resolution, Matt. I think the market's obviously been focused on Brexit for the last couple of years, and any developments towards an outcome happening is going to be a positive by the market. You can see in terms of markets, there wasn't a huge reaction to the news overnight. There hasn't been a huge reaction across Asian markets today. So, I'm like most out there, I'll be looking forward to a resolution happening post this general election in December.
Absolutely. How does it influence your investment strategy, or does it even influence your investment strategy?
Yeah, if you think about the UK exposed stocks, they've been the ones in the firing line about Brexit in particular. So I think those are areas you can focus from an investment standpoint. We've seen some pretty strong moves ahead of this announcement overnight, that the market is positioning towards a more favourable outcome around Brexit. Some of these, we've seen it in the pound rallying, we've seen it in some of these UK-focused stocks have been rallying in recent weeks. So I think that part of the market will start to improve, and I think we've started to skew our portfolios towards that thematic.
James, it's Hadley out in Abu Dhabi. I want to get you to focus a little bit more on what's happening right now in the United States, particularly with the US dollar. I mean, we've seen so many moves so far, at least in terms verbally from the Fed, at least, but in terms of actual moves that make a difference there. How do you see the currency playing out at this point? Are we going to see more weakness in the US dollar?
Yeah, we've seen weakness in the last week or so in terms of the US dollar. But if you take a step back, the movement since the GFC low in 2008 has been a massive bull market in terms of the US dollar against the basket. So this could be a tectonic change of trend in terms of markets. If we start to see further weakness in the US dollar, we've started to see only tentative signs of it. But if we see that theme continue, then that's going to have major ramifications across asset markets. So, it would be bullish for the materials space, for instance. It would be bullish for the reflationary trade. We've started to see interest rates bottoming out, particularly US 10-year bond yields, etc. So I think the US dollar is a really key market that we should be watching at this point in time, and further weakness would be obviously positive for Asian markets as well.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.